And the reason why is I see like people on Twitter now breathlessly rambling on about de-dollarization and all of this stuff. And I think if any of these people would think from first principles, the first thing that you would know is that the yuan is pegged to the US dollar. And so as long as it's pegged, whether you trade through the US dollar or you don't and you directly go to yuan, you're indexed to the US dollar. And then you use a dollar swap to convert it into the currency you need. So I don't know. I think this is kind of like a lot of folks who don't really know what's going on.
Hey guys, welcome back to Library of Wealth. Today we have venture capitalist Chamath on the In Podcast, sharing his thoughts on the potential risks to the US dollar and how this will significantly affect the market in 2023. Chamath highlights the recent deal between China and Iran, which bypasses US sanctions by trading in their own currencies. He explains that the yuan is pegged to the US dollar through currency swaps. He also points out that this currency peg and the incentives for replacing the dollar must be taken into account when discussing the idea of de-dollarization, as well as China's current dominance in trade. Chamath also believes that China's manipulation of its currency to gain a trading partner status should be considered when analyzing its economic power. He talks about the growing trend of de-dollarization and the two main reasons behind it. He criticizes the US's use of the dollar as a weapon in foreign policy, which makes it an unreliable store of value for other countries. Let's get right into the latest interview with Chamath as he gives his market analysis for the next few months and what we can expect heading into the second half of 2023. Before we dive in, don't forget to hit the like button and subscribe. It's a tremendous help for the growth of the channel and helps us bring you more content just like this.
The reason why China has had so much dominance as a trading partner, and the reason why China's central bank has the largest amount of foreign US dollar reserves, about $3.5 trillion, is exactly because of the thing that you want to ignore in order to have this highfalutin intellectual conversation. It is pegged to the US dollar. And until it is unpegged in a free-floating currency, we will never know what the real market clearing price is. China has been very effectively able to manipulate this currency since they were brought into the WTO in order to engender that trading partner status. They were able to artificially suppress the value of their currency so that exports from China could gain traction in countries all around the world. You have to take into account this currency peg, and you have to ask the question, where would the currency be if it wasn't free floating? And then what would the incentives be for folks to replace the dollar? And I think that there's a lot of interesting questions there that are worth asking, but I think you have to be a little bit more intellectually honest to have the discussion.
And just for clarity, Chamath, you said they already have these deals with Pakistan and Brazil.
And Russia.
You meant Pakistan and Russia, I think. They already have those deals with those two.
Pakistan and Russia.
I think de-dollarization hasn't happened yet, but I think it's a risk. And I think there's a bunch of reasons why the risk is growing. So first of all, we have $32 trillion in debt. Someone has to finance that debt. And the bigger that number gets, the more unattractive our debt is, because they have to be concerned that we're eventually going to monetize the debt, pay it back by printing a bunch of new dollars. So that's point number one, is we have these massive deficits and debts. Number two is that we have, I think in the last couple of years, really weaponized the dollar. So if you look at like what we've done with Ukraine and Russia, we basically seized hundreds of billions of dollars of Russian reserves that were held in dollars. We've excluded them from the SWIFT banking system. We've imposed massive sanctions on them. And in fact, we now have sanctions on a huge number of countries all over the world. So we're very sanction happy. All of which makes these countries view the dollar as an unreliable store of value. Why would you store your money in something that can be taken away by the US, and specifically by the State Department? So I think this is a major change in the way that we view the dollar over the last couple of years, is we're going to use it as a weapon. That, again, that makes it viewed...
Well, that's not the first time we've ever done that, right? We've done sanctions against many different
We've done sanctions, but as
Yeah.
far as I know, we've never seized foreign currency reserves and excluded a country from SWIFT, which is the banking system. So as an instrument of U.S. foreign policy. So, I mean, I could be wrong about that, but this was a major event when it happened. Remember, we also did stuff like seize the yachts and the foreign holdings of Russian oligarchs. Remember their ill-gotten gains? We suddenly decided they were ill-gotten. Let me tell you, We didn't think they were ill-gotten when those Russian billionaires were buying those yachts or buying New York real estate or London real estate.
Or investing in Facebook.
Or investing in companies here or buying sports teams or what have you. We didn't think they were ill-gotten at the time that they were actually made and spent, but we decided subsequently we're just going to seize those things. Well, again, if you are a foreign country or a wealthy person in a foreign country and you're just trying to decide where you're going to keep your money, you may not want it to be liable to the vagaries of U.S. foreign policy. So I think all these things do matter. And when you're running the kind of debt and deficits we have, and you're making the U.S. dollar less attractive, you are running a risk.
Chamath points out that the U.S. has seized foreign currency reserves and excluded countries from the SWIFT banking system, which can make other countries view the dollar as a liability. He emphasizes the potential issues associated with the U.S. government's debt and unfunded liabilities, particularly with regard to pensions of both state and local governments, private institutions, and Social Security.
We have this $32 trillion debt that we're now having to refinance at much higher interest rates. I read somewhere that half our government debt, so $16 billion, is going to come due, and it's going to have to be refinanced in the next 3 years. The average rate on that debt is 1.7%. Well, if you want to refinance it at 10-year rates, you're going to be looking at somewhere between 3.5% and 4%, maybe more. So you're looking at a doubling of the interest costs. And I also read that by 2030, we're going to have over $1 trillion of interest expense owed by the U.S. government every year. That is money that's not funding anyone's Social Security. It's not funding anyone's healthcare. It's not funding one weapons program. It's not funding anything we want. It's just the VIG. It's going to be more than a quarter of our total federal budget.
Look, we're in trouble, and it's unclear the timing and the path, but the arithmetic is pretty simple. In addition to the point Sachs made, you guys saw the news. The city of Chicago has a $44 billion pension hole. That's just the tip of the iceberg on unfunded pension liabilities from both state government, city government, even private institutions. This is hundreds of millions of people worldwide that are expecting money coming to them from institutions that ultimately the federal government of the US is likely going to have to backstop to some degree. So that's another huge check that's going to need to be written, that the federal government is inevitably going to have to write, because we're not going to just let all these people have no money and become starving. And Social Security right now is projected to go bankrupt sometime between 2030 and 2035. So we're going to have to write a check to cover the hole there. The holes need to be filled. So the money is not going to just not get paid to the pensioners. Social Security is not going to go away. Just like we saw in France, if you start to do that, you have revolutions in the street. There's literally bonfires at intersections in France, in Paris today, because people don't want to wait another 2 years before they get their pension payments. So ultimately, that check has to be written. When you add up the column of how much money is not on the balance sheet today, how much liability is not on the balance sheet today, that is ultimately going to have to get paid out, and the US government is going to print money to pay it out, it indicates that there is a higher degree of uncertainty on whether or not I'm actually going to get the value back for the bonds that I'm buying in US dollar denominated form, or that the US dollar is actually going to be strong enough to cover the cost, or has enough kind of, or has too much volatility because of this uncertainty.
Chamath predicts that if the U.S. debt is refinanced at 10-year rates, it could result in a doubling of interest costs. By 2030, the U.S. government may owe over $1 trillion in interest expenses alone each year, which is more than a quarter of the total federal budget. He argues that while Social Security is unlikely to go away, the government will need to print money to pay out these liabilities, which could lead to inflation and a weakening of the U.S. dollar. Chamath suggests that this uncertainty may cause people to diversify away from holding only U.S. dollars, as well as potentially leading to a shift away from the standard currency for global trade. He points out the need for the U.S. government to address its fiscal and monetary policies to maintain its dominance in global trade. What do you think about the latest interview with Chamath, as well as his take on where the economy is headed in the second half of 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.